If you still insist that, okay, tell us one microcap company or one penny stock company that I should be investing in, what should that be? Hi everyone, welcome to today's video. So on today's video, we are going to understand how to buy penny stocks intelligently. Let me kickstart our conversation by taking you to ticker tape and showing you a case study of a stock called as DigJam. So this stock was trading at roughly 4.85 rupees back in March of 2021, and the entire year it started climbing up and it reached all the way till 328 rupees approximately. So 1 lakh rupee invested in this stock would have become roughly 60 lakh rupees. I will say that again, 1 lakh rupee becomes 60 lakh rupees, and that is the reason why people are fascinated with buying penny stocks. So on this video, I'm going to break it down that what penny stocks are, how you can intelligently take bets on penny stocks, should you be buying, should you not be buying, and what are 3 key penny assets that I'm super excited about. Also, a very quick disclaimer, especially about this video, this is not an investment advice. Anything that I'm talking about on this video is risky. I will say it again, it is risky. So please understand this viewpoint and only then proceed to watching this video. Otherwise, if I just blurt out a name, you would go and purchase it. It's a penny stock. It is going to be highly volatile. So please don't do that. Please don't do that. Please be sensible that if you want to make like 5,000, 6,000% return on a particular stock, there will be immense risk associated with it. So consider this as intelligent gambling. That is what it is. I'm being very upfront and honest with you. So let us kickstart our discussion and let us first and foremost speak about what penny stocks exactly are. So in simple words, penny stocks are like backbenchers. Even teachers do not trust them to do well. They just keep on having fun sitting in the back of the class and enjoying their life. So that is very similar to how some of the stocks are in the stock market. There is no set definition of what penny stocks exactly are, but usually some of the features associated with penny stocks are that they are usually high debt companies, they are money-pity companies, there is no growth prospect, that is what people see. Their fundamentals are not exciting to look at. They trade at a very small amount. For example, 1 rupee, 5 rupee, 7 rupee like this. So that is what penny stocks essentially mean. So if you go and speak with fundamental investors, they would not go and buy penny stocks simply because of the fact that there is a very high degree of uncertainty involved with these stocks. Now, since I have bashed down what penny stocks are, let's try to understand why people get so excited about penny stocks. So here is a chart for you that shows the return of some of the penny stocks in 2021. And the returns were extremely impressive. So take a look at this. DigJam, for example, gave like 6,000% return. There was Adinath Textiles that gave like approximately 5,000% return. There was MIC Electronics that gave like 2,000% return. These are 1-year returns. It is like crazy amount of growth that happens. And it sounds very interesting because think about it logically that if you are picking 100 penny stocks and even if 2 of them succeed, then you will end up making crazy amount of money. So this is the good part of it, and that is the reason why people get so excited by reading the word penny stock anywhere it is mentioned. So let us briefly discuss the growth story of penny stocks. That why is it that penny stocks go up? Because if you understand this fundamental point, it will help you take more educated guesses on penny stocks. So there are 4 specific reasons why penny stocks generally grow. So first reason is the market conditions. So last year the markets were in a bull run state. They were growing quite aggressively, and as a result, many of the pitai stocks, hopeless stocks, they also grew. So here is a list. I'm not saying that these are bad stocks. They have given massive returns. So they must have done something well. But to cut the long story short, penny stocks drive a lot of their value from the market conditions. This year, for example, the markets are acting very soft. So it's very unlikely that you will see many penny stocks giving multi-bagger returns this year. Why? Because the market conditions have changed. Second key point, what happens on penny stocks is that there is something called as flippening. Flippening simply means that let's imagine that there is an asset. It's a stock. No one trusts it. It's a pitai stock, backbencher stock. No one is trusting that stock. You know, even if that poor student ends up getting 20% marks, people will be very happy. So it's like that situation. So therefore, 99% people will not bet on this stock and only 1% people might be betting it. Then something magical happens with that stock for whatever reasons. It could be that a big investor has come on board. It could be that FII, DIIs have taken a sudden interest in that stock. It could be that the market dynamics of that industry has changed. It could be numerous reasons. So suddenly there is a catalyst, there is a spark that comes in, and a lot of people, these people who did not believe in that particular stock, they start jumping ships. So they start taking position in it. And there is something called as flippening of the stocks that happen. It simply means that a lot of people who were not very bullish about this stock have suddenly become bullish. So as a result, massive interest has come into that stock in a very short period of time. So resultantly, that penny stock becomes a multi-bagger all of a sudden. The third key aspect of a penny stock is that it is usually beaten down. For example, again, take a look at Big Jam, right? So it was beaten down, it was trading at less than 4 rupees. And suddenly it ended up shooting to 350 rupees. So there was no fundamental reason at play, which brings me to the fourth point, that if you actually go and study the fundamentals of some of these penny stocks, you will not see massive fundamental change. In fact, the fundamentals look very, very scary. For example, the debt on majority of these penny stocks is very, very high. And in many a times, even the promoter holding is very, very low in majority of these penny stocks. And usually the game that is outlined is that if the promoter holding is very low and if the promoters are cutting their own holding, then it's a bad stock. But that's a classic trait of a penny stock that might end up becoming good. So to cut the entire discussion short, that fundamentally you can't analyze, especially we as retail investors will not be able to get that insightful information about penny stocks to take positions. So it's a gamble. Please understand that. A key takeaway here is that if you are investing 100 rupees in a penny stock, then please split that 100 rupees into at least 10 stocks, because it's almost impossible to do fundamental analysis of these penny stocks. Now this viewpoint that penny stocks are dangerous, let me outline that also. So here is a chart for you regarding penny stocks that have destroyed wealth. So you can go through this list. These are some of the penny stocks from last year that have generated really bad returns. That's part A. Part B, you must have often heard about things like that Mr. Vijay Kedia invested in this penny stock. It became a multi-bagger. But people like Mr. Vijay Kedia or Mr. Rakesh Jhunjhunwala would invest in probably 20 companies. And only 2 or 3 might become multi-baggers out of it. They understand that game and they are okay playing that high risk, high reward game. That's the simple viewpoint. If you are okay with that type of an approach, then probably investing in penny stock might make sense. Now comes the question that, okay, Akshat, you have explained the pros and cons of investing in penny stocks. High risk, high reward game. I understand it. Now tell me, what are some of the things that I can do to mitigate my risk in terms of buying penny stocks? Because I am in absolute love with penny stocks. I want to buy penny stocks. So tell me, how should I do it? Okay, so here is a discussion for you. So point number 1, please buy penny stocks in an upward moving market. What does that mean? That right now we are in a sideways moving market. The market is moving from 15,600 to 18,200. So that is the range in which we are moving. This is a sideways market. Last year we had an upward moving market. Probably an year from now we might have a breakout and the markets will move up again. So please buy penny stocks during that phase. That is when you are likely to make the most money. This is point number 1. This is very, very commonsensical. Now comes point number 2, that okay, should I not look at fundamentals at all? The answer is no, you should still look at fundamentals. So let me give you a few examples here that what you should be doing. So let me first and foremost teach you how to build screens and use certain parameters. So first and foremost, you should input the parameter that the market cap should be less than 1000 crore because you are looking at a micro cap company. So if you pick a company which is very, very small in size, the chances of it growing is very high. So this is the first key criteria or filter that you should look at. Then the second criteria that you should look at is the sales growth. So sales growth should at least grow by 20%. This is the minimum criteria. Just play around with this criteria. I would say that for a micro cap company, the sales growth should at least be 40 to 50% growth. So let's make it 40%. But the minimum number here should be at least 20%. Then also that small cap or micro cap company should be profitable. So its profit should also grow at least at a rate of 20% profit growth. So let's run this query and see how many options do we get. So we get 736 results. Now this is the first criteria as to how you need to filter the penny stocks. Now you will say that Akshat, 736 companies, how will I filter it further? Okay, what you then need to do is that you need to go sector specific. For example, certain sectors right now are likely to go up. A classic case in point, again, not an investment advice. I'll say it again, not an investment advice. Please don't come to me and say that Akshat, you talked about this sector, it is not growing. I cannot do anything if the entire market is tanking. Okay, so with that viewpoint in mind, let me build on the example. So a classic case in point right now is the real estate market. The real estate market has given horrible growth in the last 10 years. It is very likely that it will go up. So if you can find a micro cap company whose sales are growing, whose profits are growing, and it is in the real estate sector, there are chances that it might become a multi-bagger. So this is how you pick a contrarian sector. So go through this list of 736 stocks. You will get a few stocks that will meet these criteria. Then finally, what you need to do is that you need to do a little bit of fundamental analysis. Why do I say little bit? Because like Mr. Vijay Kedia, like Mr. Rakesh Jhunjhunwala, we will not have access to promoters of these companies. So it's impossible for us to do an in-depth analysis, but it makes sense for us to at least use some brain and logic by looking at some numbers. So let me pick an example of a company called as Cerebra Integrated Technology Limited. Again, not a buying recommendation. I myself have not invested money in it. Okay. So very categorically telling you, I'm just picking this as an example, right? So take a look at this, that what does the company do? So you will say that, hey, it is into e-waste management, recycling. That is what the company does. Now think about it, that, hey, is this industry growing or not growing? So this industry has massive potential to grow right now in a country like India. Why? Because the lifespan of electronics has come down. As more and more consumer durables are purchased, these type of companies are going to do well. Right now, the consumer durable market is horribly performing. So if the stock has come down, but it has not come down a lot, it shows the strength of the stock. So let's take a look at this chart, and you can clearly see that the stock has come down, no doubt, but it is not as if that the company is going to zero. So this is point one. Second key point, take a look at the debt to equity. So debt to equity is less than 10%, which is not bad for a penny stock. Let's look at profit and sales number. So you can clearly see that up until 2019, the company was going up. 2020 crash happened. Consumer durables got crushed. They are crushed even till now. And if you take a look at trailing 12-month profit, when the markets have started recovering somewhat, the sales number have gone up. So that's one part of the equation. If you take a look at the profit margin, so since 2018 onwards, the profit margins are coming back into this type of a company. Again, not a buying recommendation, but this is some layer of fundamental analysis that you can do. Second key thing, you can take a look at investor shareholding here. Now what you will see is that, see, promoters have almost kept their holding the same. Nothing major has happened. FIIs have sold their holding. Okay, that is a worrisome sign. But look at the rate, the DIIs have increased their holding. So the overall strong shareholding has gone up. Now, can I be sure, 100% sure that, hey, this stock is going to make returns? But I'm roughly 50-50 there that, hey, this is not a horrible penny stock to buy from that particular angle. So if I have little bit of spare cash lying and if I want to take a gamble, I will gamble intelligently. So this is what intelligent gambling is. So the next point that you need to understand about penny stocks is that you must book profits. Let me prove that point by giving you two specific examples of this case. So first is regarding a company called as Adinath Textiles. So I'm not randomly picking this company. If you take a look at the biggest penny stock multi-baggers from last year, this features on number 2. Okay, so take a look at this price chart movement for the last 3 years and you will clearly see that this stock has a history of going up, coming down, going up, coming down, going up, coming down. Now, why is that the case? Now, there are numerous reasons at play, but let me outline some of the key ones. First and foremost, sometimes the promoters themselves manipulate the stock. I'm categorically saying that penny stocks at times are manipulated, and I will show you proof also in a little bit. Second key point is that basically these penny stocks move due to investor interest. Now, when FIIs, DIIs, they have made money from a stock, they tend to abandon it, they move on to some other stock. Even from a retail investor point of view, that is the same philosophy that is applied. Now, since the market cap of these companies is fairly small to begin with, any bulk selling that happens, even if one big fat investor takes an exit from these stocks do tend to fall a lot. In addition to that, these penny stocks have poor corporate governance. There are range of different issues, fundamentals change, the nature of industry change. So of course, these stocks tend to fall a lot in degrowth phase of the economy as well. Now let me show you second example to prove this point further. So this is from Brightcom Group. I had made a separate video warning people that, you know what, this stocks looks manipulated, and I explained the entire reasons. You can go and watch that video. You can clearly see that this stock gave a very sharp up move, then it fell a lot. It fell a lot in March, and towards the end of the March, SEBI came out with a circular saying that, you know what, there might be something off with this company and we are ordering a forensic audit of the financials of this particular venture. Interestingly, after that announcement, the stock price shot up because a lot of investors thought that, hey, more activity will happen on this stock. They jumped up and the stock moved up again, and now it has started to come back. So the point that I'm trying to tell you is that there is so much fascination with penny stocks in India that people go crazy. They go gaga about the fact that, hey, just tell me a penny stock, I'll go and invest. Would I recommend you to become such an investor? The answer is absolutely not. Why? Because as retail investors, our job, or 90% of our job, is to just protect our capital. If we just protect our capital, do not take losses, we will be okay. We will be making decent amount of the money. But you will say that, Akshat, you know what? I enjoy the thrill, right? I enjoy investing in the market, tracking the market. It gives me so much excitement. It's like adrenaline rush for me. I get it. So my advice to you would be twofold. First and foremost, please only invest little bit of your money in penny stocks if you want that thrill. What is that little bit? I would say that 80% of your money should go into sensible stocks. 20% max should go into penny stocks. This is for thrill seeking people. This is not for investors per se. Second, you must do a risk reward analysis. Now, what do I mean by that? Let me again jump to this particular chart. Now, you tell me that, hey, this stock has moved up here. Why are people buying the stock at this point? It makes no sense why you should be buying when this stock is here or here or here. It has already given a massive up move. So the risk is much higher than the reward associated. But yes, if you are probably buying this stock here when it has just started to give an up run, it might make sense. Similarly, if the stocks comes down here, right, if it sheds almost 70-80% of its value, if you buy a little quantity of it, maybe it makes sense. So do this basic risk reward analysis. Now comes the final section, that Akshat, what type of penny stocks you are holding or you want to hold, and can you talk a little bit about it? Okay, so 3 assets that I would comment on. First and foremost, I personally do not invest in penny stocks. I do invest in micro or small cap companies where I see some kind of fundamental moat. Can I give you a couple of examples? So the answer is yes. I had made 2 videos. One was on NGL Fine Chemical, so you can check it here. The stock has come down because the entire market has come down. So there is nothing off from that perspective. The fundamentals of the stocks are very good. Similarly, I made a video on Jyoti Resins. Again, you can check the video here. The stock has already given a very good uprun. Now, should you be entering it? Should you not be entering it? That's a call that you will need to make depending on your risk reward analysis equation. But the point that I'm trying to tell you is that the penny stocks or micro cap stocks that I had purchased, those were backed by fundamentals. So please watch these videos. It will help you get an understanding. Second key point, that what type of micro cap assets do I invest in? So I mostly invest in ICOs/IEOs. These are initial coin offerings or these are initial exchange offerings. This is in the crypto domain. Again, the moment I say the word crypto, a lot of people get agitated. Now, and hear me out. The reason why I do ICO, IDO investing is the chances of you winning that game is much higher because there are no big fat investors there who are manipulating the market per se. So I personally feel, and that is my prerogative, that I personally feel that the chances are much better in terms of you winning the ICO, IEO space compared to investing your money in risky micro cap companies in the stock market. But if you still insist that, okay, tell us one micro cap company or one penny stock company that I should be investing in, what should that be? Okay, so please don't take this as a recommendation. But if I have to put in a little bit of money, absolute sprinkle of money on something, it would be Cerebra Integrated. Why? I had already explained you the reason earlier. If there is enough interest, I will make a separate video on that. So let us define the interest as getting 15,000 likes on this particular video. So I will break it apart. I will talk about it. I will analyze the e-waste management and recycling systems in India and talk more about that industry. So I hope you enjoyed the video, and more importantly, it gave you a sense that when you should be taking positions in microcap/penny stock company versus not. Thank you so much, and I will see you tomorrow.